Hey everybody, what's going on? It is James here with Crypto Common Sense. And I wanted to sit down and shoot a video this evening. I shot one a few days ago and I edited it, started to upload it, and then just decided not to because I had some things to say in it that kind of came off kind of negative, and I didn't really want to put that out into the world like that. So I wanted to shoot this one, talk about some of the same stuff, but also address something I just found out about. Someone on my Discord told me about it. So we saw that Bybit actually got hacked, I guess, for $1.5 billion. And this just goes back to what I was actually saying in my last video with the price predictions. This is why I'm not heavily involved in crypto anymore. I know that somebody commented on the last video about they couldn't believe I was doing a video talking about predictions without owning a hardware wallet. You know, when you're trading on a serious level using a hardware wallet, it's just not, in my experience, been viable. You have to have your money on the exchanges. I used to feel safe because I would keep my money on Coinbase, and I would keep money on Kraken, which were two US-based sites, and Bittrex. But Kraken, I had a VIP rep at because of the trade volume I was doing, and they told me, point blank told me, that my money was FDIC insured when it was not. And so, like, once I realized my money wasn't actually safe, that was like a big red flag for me. And this is, you know, unfortunate because I actually thought Bybit was one of the better sites. Bybit was the site that I did most of my trading on the last year or two that I was trading cryptocurrency on a regular basis. So it's sad to see that it didn't have the safeguards in place that it should have had. All right, so I want to address that first. That's the reason that I'm not crypto. I understand like the whole hardware wallet thing, but I'm going to tell you guys real quickly before I get into some charts. It's a fallacy that hardware wallets are safe. And I know this person argued with me. I don't care. It's a fallacy. Okay. Like I said, I have a Trezor. I have some cryptocurrency on that Trezor. That Trezor a few years ago went through a firmware update and I nearly lost access to that crypto. Thankfully, I was responsible enough to keep my seed phrase. And so I was able to get back in and access my wallets. But what happens when you lose that? And some people say, well, just don't be irresponsible. Okay. Well, what happens when your house burns down? What happens when you get robbed? What happens when you are hit by a tornado? What happens when you're hit by a hurricane? What happens when you get into an accident and pass away? How does your family access that money? Like, there's so many problems with hardware wallets. They are not the solution to the problem. Okay. The solution to the problem is, I know crypto people will hate me saying this, centralization. That's the solution to the problem, right? You centralize everything. You have insurance, you have safeguards in place. Now, this person also said something about, you know, it flies in the face of what crypto stands for. Guys, I'm not a crypto Kool-Aid drinker. You all know this if you're watching the channel. Like, that whole idea that crypto is some special thing, it's bullshit. For anybody that hasn't figured this out yet, let me just share this with you and like burst your little bubbles. Crypto is a Ponzi. It has been a Ponzi all along. Okay. You have a couple of legit projects and 99% of the projects are Ponzi schemes. They're pump and dumps. They have no use case. They will never have a use case. Their only use case is making their creators rich while sucking money from retail. That's what crypto is all about. It's not about decentralization. It's not about like freedom from the dollar. It's all about making money. Institutions are not coming into crypto to make the US dollar weak. They're coming into crypto to make money. Okay. It's a bullshit Kool-Aid story. It's the same thing with like, oh, Bitcoin is a store of value. No, it's not. It's a speculative asset that has a high correlation with the tech market. When the tech market does poorly, Bitcoin does poorly. When the tech market does well, Bitcoin does well. That's literally, I mean, we've seen it over and over and over again. Okay. So if you want to trade cryptocurrency, which by the way, I don't know why anyone would actively trade cryptocurrency anymore, unless you're on a site that has super low fees. But if you want to trade cryptocurrency, you almost have to do it on an exchange. Now, if some of you are watching this and you trade through the decentralized exchanges and you know, they've improved, feel free to enlighten me because I don't want to pass around bad information. And I'll be the first to admit that I haven't actively traded on those. So I'm not an expert on those in any way, shape, or form. All right. But in my experience, I had to be on exchanges to trade serious volume. When you're doing millions of dollars of volume, you need to be on an exchange, or at least you did. Again, maybe that's changed. But I also don't know why anybody would actively trade cryptocurrency when you're paying exorbitant fees, you know, like 10%, not 10%, 0.1% fees and 0.25% fees and even, 0.06% fees. It's all ridiculous. Like today, I had a short trade day in equities. I only traded for about 2.5 hours today because I got up late. And in those 2.5 hours, I traded about $2 million of the volume. Now, my fees on that are going to be around $30, like the SEC fees and a few other little tiny little fees they charge. So call it $30, right? If I traded $2 million in cryptocurrency today on a site like Coinbase, my fees would have been somewhere around, $3,000. But it doesn't mean I hate it. Like I said, in my last video, I do think Bitcoin has a lot more upside potential. But just don't buy into fairy tales and all that shit because it's ridiculous. It's stupid, right? I mean, there's no other way to put it. It's just dumb. Don't buy into fairy tales. So let's look at a few charts. I'm going to focus away from the QQQ today and show you guys some neat stuff. If you will shift your mindset, if you're a crypto person, if you'll shift your mindset, I know the big mindset with cryptocurrency is the reason I want to trade crypto is because it's highly volatile and because you can make, hundreds of percent, it moves really fast when altcoin pops and all this stuff. Stocks do this literally every single day. Okay. And there's a rinse and repeat formula for finding these stocks before they move. So for example, this is a stock called MicroAlgo. It was one of the stocks that popped up on my scanner today. Only 5 stocks met the criteria. And this was one of them. So if you look at a 5-minute chart of this, this is essentially what you want to see. You want to see a stock that has good action pre-market and then moves sideways, because what's happening is it's consolidating. Okay. And I would say that when it consolidates like this, it has a 50-50 chance of either going down or up. And so no, it doesn't guarantee it's going to go up. There's a chance it still goes down. Okay. But 50-50 is really good because if it goes up and you're able to find an entry, it often goes way up. So as an example on this particular stock, from its open today, around $3.13, this stock pumped 274% in a matter of hours. Okay. Again, this is why I have zero interest in day trading cryptocurrency. None. I can get into this stock for literally almost nothing fee-wise, and it's going to move, right? It moved almost 300% in one trade day. So imagine you were following, I'm not going to get real deep into trade strategy. I teach all that stuff, but let's just say you were keeping this super simple. You weren't using, which I don't actually use a bunch of indicators or anything in my intraday trading. I think it's a waste of time. I think it's distractions. So I don't suggest that people go out and buy indicators for intraday trading. I say that as somebody who sells indicators, but my indicators, even the ones I sell intraday, I don't sell them individually. I give them to my Discord members and I tell them they're good learning tools, but I freely tell them that I do not use them in intraday trading. So, don't think you need to go buy a bunch of stuff. You certainly don't. But if we look at this, okay, let's just say that, okay, I've consolidated here. Here's kind of the top of my range, little baby range through here. If I get a straight line, right? Here's a little bear trap right here, breaks above that range, retests it and goes. Why couldn't somebody just take a long in this position and maybe even use a stop loss back here, which is a pretty conservative stop? I'm actually way more aggressive than that. Let's say somebody did that. Say they just said, hey, here's a pullback and I'm going to get long in this pullback because it's retesting this high right here. So they did something like that and give them about a 85-cent stop loss roughly. And let's say they rode that until there was an area of resistance that looked concerning. Well, here's a daily chart. So let's just say that they stopped or decided to take profits at this level right here. Didn't even wait for this level, this first big pivot point back here. Okay, go back to the 5-minute chart. That's almost 5R. So if they risked $100, which it's a $3 and something stop. So let's say they took a $350 trade, right? Bought 100 shares. So they're risking 85 cents in that case, $400 a day. It's that simple. It's that simple, guys. You don't need the stress that comes with cryptocurrency. I know this channel is Crypto Common Sense. That's actually one of the reasons I stopped doing videos, right? Because I felt like it was weird that I was doing stuff that was kind of like pushing people away from crypto on a crypto channel. But, I'll probably eventually start a channel specifically about trading. But this is very simple. Whereas when you look at cryptocurrency, like one of the things about crypto that used to bother me a lot when I traded it intraday was I felt like I was tied to the desk, and I had talked to other people that were trading, high volume, and they felt the same way. Like I remember a guy that I was talked to on a daily basis. He was trading, tens of millions of dollars a month. And he said, dude, I've literally peed in bottles before because I was afraid to get up from the desk. Like I never want to feel that way. That's crazy. But I related to what he was saying because there were certainly times. I remember one time I had plans with my family and I was like, I can't go because like I can't leave the desk. I'm not sure what Bitcoin's doing today. And I was like so afraid that I was going to miss my entry. So I don't miss any of that. With stocks, I know I'll just sit down in the morning. I try to be at the desk by 8:15 Central Time. And I know that typically within the first, 30 minutes, I'm going to find an entry. It's really nice because it's like, if you're a hunter, which I'm not, but if you're a hunter, it's like, exactly where and when the deer are going to be somewhere. Like, where they're going to be and when they're going to be there. So you're not sitting in the weeds for 5 hours waiting on the deer to come up. And that's what I like a lot about stocks. Okay. So that's how that worked. And again, if somebody missed that first one, maybe they're a little bit more cautious and they waited for the second one to be taken out, this pivot here, no big deal. Look, it came up, it broke it, it pivoted back, retested it. See right here, little retest. Maybe somebody got long here, somewhere in this zone, and said, hey, I'll just use this last pivot as my stop loss. Same thing. They still could have got over a 2-hour trade. Now, again, I'm more aggressive than this. These are just kind of like 30,000 foot overview types of trades. I have a very, very precise system for entering my trades. I have a very precise system for where I set my stop losses. And ideally, I'd like to get more than 2R. Ideally, I want to find a setup, like on a 5-minute chart, for example, and then use like a 1-minute chart or even a 30-second chart for my entry. So I can have a very, very tight stop loss and then the big profit target. So essentially I can use like a 5-minute chart's profit target, but then use like a 30-second chart stop loss. So maybe I'm going for, like a $3 move while risking like 5 cents per share or 10 cents per share. So then I have an upside of, 10, 20, 30R versus, 2R. I'll show you the other stocks that popped up on my scanner and I'll show you why they weren't tradable. So this was the second stock. And if you notice, this one actually did pop. But if you notice it's pre-market, yeah, it moved sideways, but it was moving sideways all along. It never really had any momentum up. And it's also very, very gappy, which means there wasn't a lot of liquidity. So this is one of those that somebody can look at in hindsight and say, oh, well, I could have got in here and done this. I don't know that there was a real reason to get in. So this is not one that I considered tradable. This was the third one that showed up on the scanner. It popped and went sideways, and it never really did have any kind of upside potential. It just immediately dumped. This was the fourth one. Again, no real pre-market on it. So in hindsight, it looks like it could have been good, but all these gaps, it's just poor liquidity, very low volume, right? For example, this candle had 100 volume and around $17. That's not, how do you get in and out on that without slippage? You don't. And then this was the other one, right? It moved up and was actually pulling back. So it didn't look great to trade either. But this one here, it did exactly what I wanted to see. And somebody asked me on Facebook, they said, did you trade this? I did not trade this. Just to be clear, one of my Discord members traded it this morning and, he was trading it all morning. I was actually late getting to my desk today. I was up late last night. Up late the night before. I only had 4 hours of sleep. So last night I was bonked and I actually slept for 10 hours. I didn't actually get to my desk till almost noon Eastern time today. So I focused on QQQ. I didn't do any trading on what I call FOMO stocks. So I just traded a few $1 million worth of QQQ instead, which worked out fine, right? It worked out great. That's another thing about trading is you have so many options available to you. You don't have to just hope and pray that one altcoin or one cryptocurrency goes to the moon. So there's a whole lot of things that I covered in my last video that I never published. But this video is already getting fairly long. It's almost 18 minutes long, and I'm actually getting ready to leave to go to a school event for my stepson's daughter. So I'm going to wrap it up there. I'll probably shoot another one in a few days, sharing some more stuff. Like I said, I'm not trying to be negative toward anyone. I respect other people's opinions, but at the same time, it's like I have experience with these things. Like when I'm talking about things, I'm not pulling stuff out of thin air. I'm not just like hypothesizing or regurgitating something that I read on social media. You know, at this point, I've traded somewhere around $1 billion worth of volume. Like I'm pretty clued in, like on how things work. And there's a reason that I do the things I do. It wasn't something that I just randomly decided one day, oh, I'm not going to, invest heavily in cryptocurrency. There were legitimate reasons and logic that went into that. And I have no regrets whatsoever about not getting heavily invested in cryptocurrency. I sleep like a baby at night versus when I had hundreds of thousands of dollars worth of cryptocurrency, I didn't sleep well. I was always concerned about something happening. So for me, it doesn't make sense to be that exposed to it. For you, maybe it does. You have to look at your financial situation, your risk appetite, where you're at in life, how old you are, what your income is, what your retirement looks like, all those things. Maybe it's worth it for you. It's not for me, but if it is for you, I have no problem with that. I'm not judging anybody. You do what you want with your own money. That's just an obvious thing. So that's my 2 cents or 2 Satoshis for you crypto lovers. I will wrap it up there. Please remember that I'm just some guy sitting in a spare bedroom, same way I have been for the last 7, almost 8 years now. So nothing in the video is financial advice, and you should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset. As always, I'll wrap up by saying this is James with Crypto Common Sense, and please remember to trade safe.